Hello everybody and welcome to my regular weekly look at the gold and silver price action, trying to translate, disseminate, unscrabble what is going on with those two precious metals. And really from last week, which was really the focus of interest rate decisions around the world, it's been pretty stable. It had a bad Wednesday coming off, gold that is, and silver, as we know, highly correlated to it. Follows suit. But if we jump straight into the charts now, we will have a look at what has been going on since the US rate decision last Wednesday. You can see there is the action, fall in the price roughly to about 1935 from those highs, 1968, just over $30 downside there. Since then, really, it's been pretty flat. Zoom in on today's action, and the range has been 1940 to 1946, 47. So really nothing much happening there at the moment today. Let's have a quick look at silver. Let's drag that down. Probably a very similar price story. What's been going on this morning? Let's take a look. That's flat as well. Not a lot. Range again. 26, 23, 65 to about 23.90. So not a lot happening there either yet. Sometimes you can get a good kickstart on Monday morning, but at the moment there's no real big news out this week either. Some minor scheduled events, as if you're watching the FX show earlier today, you've seen the calendar. Nothing too much to stir up the pot, so to speak. Flat start to the week. So let's dig into the bigger picture. Let's start with the correlation between the two assets, and the takeaway is it's weaker, but it's stabilizing really around 69, 68%. Nothing too much to take away there. No big drop-offs, no correlation busts there. So carrying on as normal, and then into the gold-silver ratio. Like I said a few times before, this is good for mean reverting trades or that type of range type trade strategy. This is a much longer term look. The daily one, you can use different time frames. See, we're moving down towards the bottom of that range there, showing you how much silver you can buy for 1 ounce of gold. Currently at 81.7, bottom of that range 77.9. It's really been traveling in that one standard deviation band there since May. Really, we haven't seen much upside move there. A lot of different strategies and ideas you can come around from this ratio. It's a historic ratio that people like to look at in this market. I said just change around the time frames and come up with some ideas. But at the moment, it's just getting a bit weaker down there. So nothing too dramatic to take away from there. And if we look at some sentiment, technical analysis, seasonality down the bottom, this is gold. I'm using ticker GC1. And what have we got? We've got a bit of a weakening in the seasonality this time of year before it picks up into the new year, so no changes there. You've got the large traders here, and for the commitment to traders data, building up the longer position slightly, 136,000. I want to see that moving in line with the price, and it sort of is, we could call it at best week bullish at the moment, if not flat. Really, it's not massively exciting there. Silver, what's going on there? Let's pull that back a bit. Same sort of story. Weakness, maybe a bit more weakness in the seasonality before kicking off through to the end of the year. Bit of a divergence happening here on silver, mind you. we've got the large speculators going shorter, reducing their long positions from 28,000 in beginning of September down to 16,000 now, and we've got the price going up there. So that's an interesting one. Maybe some more bearishness to come, maybe in silver. Interesting one to watch there. Remember, silver more an industrial use metal as well, so focusing on the growth of the global economy, markets like China, use silver in things like solar. It's in all the sectors really now. Photography, semiconductors. It's a good industrial metal now, and it's growing in demand there. So that's when you also relate that back to the correlation in gold. That's why you might also see more of a divergence there in that correlation. But at the moment, I'd say that's looking a bit weaker than gold, silver. Maybe a bit more bearish in the shorter term. Real long-term price action now. We got the weekly chart for gold. There's no real change from the previous week. We've still got this big uptrend, and we've got this real strong top there to the price action. As you can see, 3 levels there, all around 2100. That is the key upside number before it breaks on upwards. We had that big support bounce from that line there, and let's do some Fibonacci on quickly. Let's go down to the start of that, and from there, that low there, at the start of that uptrend. And upsides, long-term wise, 2,300, the mids there, and almost 2,500 to that upside. But to get through there, break those 3 tops, it's going to take some significant event. Probably some bad economic news globally, something to shake the leaves out the tree, so to speak. There, talking of volume there as well, we've got a bit of a peak there, so it's building at this level. Got key Fibonacci line here at 1745, 1750, which ties into that uptrend, so we could see the price back down to there. Then the big gap in terms of volume, that arc there, back down to the point of control, which is about 1,300. You can see where all that price action is there on the left. But at the moment, it's feeling neutral to weak, but there's a lot of key technicals on the way down. Again, we got this bounce here that ties in with the Fibonacci at 1637. So probably another area of possible support if price does come down. You can see a lot of price action in there as well. And there where the price reverted on back up. So I think it's feeling a bit boxy again in that 1650 to 2100 range. It's a nice big wide range, so if you're trading that range, there's plenty of opportunity to be had there. Trend bullish, awesome oscillator just starting to turn bullish. So really, see that sort of triangle pattern building up there. I'm going to go neutral while it stays in that pattern. Let's just make that a bit darker before it decides on which way it breaks out. And silver, what have we got? Let's pull that back. Let's draw a trend line on there. More of a triangle-y type of look to the chart there. We've got that nice big arc in volume down to the point of control, which was that bounce right there at 17 1/4, let's call that. Let's draw on some Fibonacci's. Let's cover that high to low there. We're trading right around the 61.8% Fibonacci line, which is 23 1/4. See a lot of price action there all through that zone. So quite a lot of support building there. Got this short-term type triangle pattern in there. If it breaks down, suggest it's down into this zone support, maybe at that trend line at 19.9. then that key Fibonacci line 18.8, and then the point of control down at 17.25. If it can break up, then really looking at about $30 where those highs bounced from back down. So it's got to break on that and then up to the mid-30s if it can mosey on from there. Trend still up, all small sizes are still up. So again, a bit like gold, staying neutral there until it decides to move outside of that sort of, let's call it the holding pattern that it's currently in. Now into the Renko charts for no, let's actually do line break first. We've got gold. Looking at this, we've got a short setup just commencing here in the line breaks. Remember, I used the 4-2 method here to set the chart up, and 2 reversals. So that's my more aggressive approach, but you could be more conservative and look for this level 1920 for a downside move. But now at 1950, feeling a bit weak there on the gold. What's it doing on silver? This I've zoomed in a bit. The previous one was one day charts. It's a 1 hour chart. Maybe a bit more conservative to a potential upside setup there, with 23.92 the potential entry point there. Into the Renkos now. Gold, bit of a long, we'll actually call it medium term. Look, let's start with the indicators. Bearish, stochastic bearish DMI, price moving on down under its point of control, slipped on down, seeing a lot of support around this 1925 area. Let's draw on more of a bearish Fibonacci. Look, we've got that low there, which was June, towards the end of June of this year, up to the high of May. And if we drag that across, what have we got as potential downside? We can see we'll be looking at mid 1800s, either side of that, 1840s, 1860s potential downside. But we can see, it's just a tight old range, 2000 to 1900 since May. Nothing really exciting going on there. I suppose it's indecision really in the market generally. Doesn't really know which way to turn. Upside wise, we've got potential to move up into the early 2000s, which we saw, like I say, back in May, or like I say, slip down to the mid 1800s. Now focusing on a bit shorter term price action, a bit more immediate. We've got $2 block size. Again, down the bottom, we've got both the indicators, stochastic and DMI modified bearish. Point control is pretty much where we're at the moment. Go back to the beginning of August. High to low ties actually this time. I think it's still feeling a bit weak. Downwards wise, I think it 1915s or whatever, where we saw that support the price before it pinged on up. Then we've got 1890, 1875, 1856. Above the point of control, we're looking at probably breaking these different highs first, which correspond in with the Fibonacci's. We've got this more interesting one around 1970, there's arcing the volume there, and up to 2000 up the top in the short term. And let's wrap up with similar look with Renko charts. We've got 20 cents block size here compared to the shorter term look of about, call it 7 cents. What we've got going on, indicators looking a bit more bullish there on the stochastics. The DMI looking like it's just about across, but you can see it's a lot of crosses over there, bit of indecision there. Draw on the stochastics high to the low. We saw a low there back in March time. We're trading above that point of control. which is at around 23.19, hitting this Fibonacci here, just under 24. A lot of volume around that zone. Then that arc up to the next highs where we've got that, multiple pullback. And if you go back a bit further, you can see it used it also as support to bounce on up before pulling back. So if we can get through $25, then we're talking mid 26s up to those highs in 28 world, and then downwards. Suggest we're focusing on that key 38.2% Fibonacci line at 22.44, and then different levels 21.5 and just under 20. And right into the short term, then what can we take away? Let's get those Fibonacci's on straight away. We've got that high in August of 25 and a third. Let's actually do it the other way around. Control in at 23 and a third. See the volume there, not a lot on the way up, a bit more on the way down. Support here around that 22.5 sort of number. We've got some action over there as well, the same sort of levels. If it can come down, we're talking 21 just under 22 and 21.5. An up ping, we could be looking at 24 and a third, 24.7, and then those highs 25.35. So there you go. That's gold and silver at the moment. It's not very exciting, I'm afraid. And even in terms of ranges, it's not pushing really well over the last few months, pushing wide enough to be that exciting of an opportunity compared to other markets. So a bit dull there on gold and silver, but certainly worth keeping an eye on for those breakouts from those chart patterns that we've looked at today. So if you like today's analysis, give us the thumbs up. Plenty more coming this week in terms of live stream. We've got the S&P 500 at 1 o'clock today, GMT time. And tomorrow, FTSE 100 and crude oil and nat gas. Wednesday, we've got Bitcoin and 3 stocks to buy and 3 to sell. So an action-packed week again. So I suggest you hit that subs button and bell button so you get notified when those shows are coming up. So all that's left for me to say is thanks for watching. Good luck with the trading, and I hope to see you all soon.